Hey everyone, welcome back to NIM's Adventures to Financial Freedom. In this episode, we're covering WPAY, the brand new ETF from Roundhill that so many investors have been waiting for. It's already making waves with its weekly payouts, and there's a lot of buzz about how it stacks up against YMAX. So let's dive in and break down what WPAY is, why it's different, and why there's so much excitement around it. First things first, what exactly is WPAY? WPAY stands for the Roundhill Weekly Pay Universe ETF. Instead of buying just one single stock weekly pay ETF, this fund gives you all of them in a single ticker. Right now, WPAY holds 15 underlying weekly pay ETFs, covering giants like Apple, Nvidia, Tesla, Microsoft, Amazon, Meta, Alphabet, Berkshire Hathaway, Palantir, Coinbase, Netflix, Broadcom, and more. And investors get paid every Wednesday. Now here's where things get exciting. Even though it just launched, WPAY has already paid its first distribution, and the implied yield was over 50%. That's a massive number to start with. On top of that, the fund has pulled in almost $70 million in assets in just a few short weeks. That kind of growth shows just how much excitement there is around this product. So, what makes WPAY different from other ETFs out there? Let's break it down. First, the leverage. Most leveraged ETFs go 2 times or even 3 times the stock. That's aggressive and it can wipe you out fast. WPAY only uses 1.2 times leverage. Think of it this way. If Nvidia goes up 10% in a week, WPAY's Nvidia slice should be up about 12%. But if it falls 10%, you're down 12. So you get a boost, but not the extreme volatility of a 2x or 3x fund. It's more controlled. Second, the reset. Daily reset funds like TQQQ compound gains and losses every single day. In a choppy market, that daily compounding eats into returns. WPAY resets weekly instead. So if Tesla drops early in the week but recovers by Friday, WPAY resets at the weekly close, not at every single dip. That makes it much smoother for long-term investors. Third, the weighting. Each stock ETF is about 6.5% of the portfolio. Once a month, WPAY rebalances. Let's say Nvidia doubles while Netflix lags. The fund trims some Nvidia and adds more Netflix. That's automatic buy low, sell high, built right into the structure. Fourth, there's no options overlay. Covered call funds cap upside because they sell calls. WPAY doesn't do that. It uses swaps for exposure. So if the stocks run, you capture the full upside. Simple and clean. And finally, fees. WPAY's expense ratio is 0.99%. Normally, a fund of funds means you'd pay 2 layers of fees. But Roundhill is waiving that second layer until at least September 2026. Of course, there are risks. Leverage still cuts both ways. Down weeks hurt more. The fund is still very tech-heavy, even with 15 names. And it's brand new, so we don't have a long history to look at yet. Now let's compare it to YMAX. YMAX is YieldMax's covered call ETF. It holds 25 YieldMax funds and focuses on income. WPAY holds 15 weekly pay funds with no upside cap. Personally, I prefer the WPAY holdings. YMAX feels more like a pure income play, while WPAY gives you income and growth potential. And to put my money where my mouth is, I've already picked up 340 shares of WPAY to see how it goes, and I might add more later. Of course, this isn't financial advice. I'm just sharing my personal journey for entertainment. Always do your own research before making investment decisions. So to wrap it up, WPAY is designed for weekly cash flow, exposure to the biggest names in the market, and room for capital appreciation. It's already off to a strong start with a big first payout and nearly $70 million under management. But remember, leverage means higher risk, and this is still a very new fund. Now I'd love to hear from you. Would you pick WPAY or YMAX? Drop your thoughts in the comments below. If you found this video helpful, don't forget to give it a thumbs up, subscribe, and ring the bell to stay updated. Also, feel free to share this video with others who might benefit from these insights. It helps us grow and continue this journey to financial freedom together. Thanks for watching, and I'll see you in the next episode of NIM's Adventures to Financial Freedom.